Shalom, shalom, shalom. Welcome back to another market recap. I'm your host Jamal with the SetApartTrader YouTube channel. I want to say peace and blessings and shalom to the Kodashims, anyone that's tuning in for the very first time. This is a time where you hit that subscribe button, hit that like button. Also, to be notified whenever I upload future uploads, hit that notification bell so you'll be first in line to know when a new video has dropped. It's Monday, November 10th. We were able to take some opportunities that the market presented today. So I want to go ahead and dive into those opportunities and do a quick brief recap. The thought process, the idea is the same. All right, we're using premium and discount arrays to identify opportunities where the market may be able to give us a reaction and how we can drop down to the lower time frame to take advantage. So with that being said, let's dive into the recap now. Friday, if we look at this down close candle, the low of that candle, we can see price dug into it on Friday, and then we can see in the afternoon session on Friday, price continued trading higher. And then when the market opened up at 6 p.m., we could see the gap opening and price started to trade inside of these premium array where we have this bearish fair value gap here, this 1 hour fair value gap, and then we have this also 1 hour fair value gap. Now, the reason why I was looking for opportunities to go short is because I wanted to see how price reacted at these levels, right? So inside these premium fair value gap, and the reason why this is a premium fair value gap is if we were to consider the swing high and swing low, we can see that this area when price was consolidating, this was the last high and then started pushing down. So from this area right here, this swing from swing high to swing low, that's the most current one. So when price is above the 50% level here, we're considering that level to be premium. So when I see price opened up and it consolidated, and I'm seeing before the New York equities open that price is overall above the 50% level, then I'm looking for an opportunity to go short. Now, it could be a short-term opportunity or it could be a long-term opportunity, but at the moment, I'm looking for a short because I see how price is reacting at these levels here. Let's look at the narrative, right? Let's go to the 15-minute time frame, and we can see here, obviously this is after the fact, but before the trade was executed, we can see price is inside of this 1 hour bearish fair value gap that's highlighted in gray, right? And we can see how price reacted because when the market opened, we had these relative equal highs here. So this level right here, we have relative equal highs sitting here. We have a high here, high here, high here. So we can see at the open at 9:30, price swept this buy side liquidity here with these relative equal highs. Now, the idea when price sweeps a buy side liquidity, we're just looking for an opportunity for a displacement to the downside, give us a fair value gap in the form of a bearish fair value gap or even engulfing a bullish fair value gap, right? And that's how I was able to incorporate the shorts for today as a confirmation bias, right? So rewind that. It may make a lot more sense if you rewind what I just stated about engulfing a bullish order block looking for shorts, right? As price was sweeping this buy side liquidity here, we can note that right here we have the New York opening 8:30 candle, price was trading above it. That's an indication that we're accumulating contracts to go short. Also at this time, price was above the midnight opening price as well. That's the second confirmation that we have a likely probability that price will go short soon, right? Now we have two things to note. We're above the equilibrium level and we're above the New York and midnight opening price level, and we have seen buy side liquidity swept. This is the midpoint. This right here, this fair value gap, this 1 hour fair value gap, this is the midpoint, right? If price respects the midpoint level, then that's a key indication that we're not going to go higher at this moment, right? What I want us to note is that we're looking at Nasdaq, right? And we're going to pay attention to this candle right here at 10:10 a.m. And we're going to look at this candle here at 10:25 a.m. We can see that the 10:25 a.m. candle, it did trade higher than the 10:10 candle, which is a higher high, right? That was formed. Now, if we go ahead and be able to look at the correlated pairs, so then I looked at US 30, known as the Dow Jones Industrial 30, right? We can see that the same candle at 10:10 versus the candle at 10:25, this candle here, this made a lower high, right? And we have SMT, that means it's smart money technique divergence. So this is a bearish SMT that's starting to be able to help me to build on top of the fact that on Nasdaq, we're above the midnight opening price and the New York opening price. We are above equilibrium, right? We are rejecting the consequent encroachment, the midpoint of the 1 hour bearish fair value gap, right? And we are also at a premium, and now we have SMT divergence. Now, price has also swept relative equal highs, buy side liquidity. Now we're looking for a rejection of price going higher. Now, if I continue to focus more on NQ on the 1 minute time frame, we can see things a little bit more clearer for evidence to get in for these longs, right? We have right here at 9:57, when after price had swept this buy side liquidity here, we have this bullish fair value gap that's right here, right? That can be seen clearly right here, right? So the idea now is I want to see a displacement to the downside, and I want to see a bearish fair value gap. That's what I was thinking at the time. Now, the thing about these fair value gaps is you can be able to utilize them to be able to confirm if price is going to go lower by using a bullish fair value gap. If this bullish fair value gap gets engulfed, then that is an idea that, hey, we're probably going to go short. This fair value gap right here, it closed below the fair value gap. That's the idea that, hey, price is probably going to then roll over and continue going short. So at 10:18 on this candle right here is when I started to go short, because we already engulfed this bullish fair value gap here. And now the candles that are printing, they're respecting the midpoint of this consequent encroachment candle. So once I saw this candle close, I took my shorts and I had my stop losses about 15 to 25 pips above the recent high here, right? Now we can see that price did break lower and then shot right back up into this area right here. Now, I wasn't really worried, because once I saw that this bullish fair value gap got engulfed at this current time, it's giving me an indication that I am right and that price is eventually going to break lower. Now, we can see that price did consolidate a little bit above the midpoint, and then we can see here at 10:37 price broke below it and then started making lower lows, right? Now, on this same time frame here, we can see that price eventually did give us this bearish fair value gap, right? It also broke below this short-term low that was formed here at 10:19 after my entry, and we can see now we have a bearish market structure shift. We have a 1 minute bearish fair value gap, but I already took my entry here. This entry at this level would be a lot more conservative, but the more experience that you have with watching price and seeing that these levels, once they get engulfed, and the idea, the overall higher time frame indication as far as where price is going to go currently, that's the reason why I was able to take my entries once I saw this got engulfed here. But I'm just showing you guys that the key factors as far as what I always look for, it did come into play. And we can see price started moving south beautifully into this discount PD array, right? So here on the 15-minute time frame, the reason for the exit, because as price was diving inside here, we can see that we have a bullish fair value gap with the previous market structure shift. This happened in London. So once price revisited this level here, once I saw that price was rejecting the idea of going lower, dug right into the midnight opening price here and revisited the minor sell side liquidity where we have relative equal lows here. once I saw price rejecting the idea of going lower is when I was able to take my exit. And it also makes sense because price is always seeking premium and it's always seeking a discount. So it has already found its premium level here when it traded to the 1 hour fair value gap and rejected and then started trading lower and sought this discount level here. And so that's how the trade kind of played out today. And if you have stayed to the end, you will see I have a 1 minute replay of that trade execution. And I hope you guys enjoy this recap. Thank you again for tuning into our YouTube channel. And again, if you're here this long, you like this type of content, if you would like to see more of it, go ahead and hit that like button, hit that subscribe and notification bell, and drop a comment and let me know how your trading week began.
Ooh.